Welcome to our eSignal Weekly Forex and Futures Forecast. My name is Jay Norris. I teach trading at Trading University. Before we get to the charts, I think this is apropos saying it's not easy to see both sides of the same coin. We have to realize that as traders, that if you can't make money on the short side, then you got to swing long, or vice versa. Always good advice for a trader. First market we're taking a look at is the Australian US dollar. Boy, things swung around pretty good for the Aussie. In 1 week's time, you reversed both your 25-day and 50-day. This is an interesting market for us. Now we can get a little bit excited about buying dips in this market. When you see big shifts like that, and believe me, the 50-day, well, 25 too, 25 essentially a reflection of the day-to-day news, that's a big shift. When you get those shifts, that doesn't mean you run right out and jump in and buy it. From our perspective, we start to home in on buying dips now. So we will definitely home in on those buy zones, home in on support levels below this market in anticipation of those levels holding. Now that you have, in fact, shifted that pattern, you put in a higher low here and you followed up with a higher high. So that's impressive from our perspective. All these shorter term patterns are up now. Next market, the Swiss. Dollar Swiss had a shorter term turnaround. You shifted that 25-day pattern down. We would anticipate a move down into that 50-day pattern support. Not that far, 94.50 or so. So we'd anticipate a move essentially on that 95 handle, potentially probe below there, looking for support around 94.55, between 94.50 and 94.55. So that'd be a level that we'd watch for. As short-term traders, will even go after the short side, selling intraday rallies here in anticipation of a test of 95 even and below. Next market, dollar index. Dollar index, we see a shift here. Also, you shifted that 25-day pattern down. On the other hand, again, similar to dollar Swiss, your 50-day did hold. Kind of a strange-looking 50-day. You look at your 50-day box, you go back 50, 60 days, and you're in the bottom half of that box, yet that pattern is bullish. That is correct because you had a couple of closes above that significant level in there to shift it. So funny market. Similar to dollar Swiss, we think you'll see a test of these lower levels. The most obvious support is going to be 94, the figure there, 94 even, and we think that's going to be a pretty good downside. And we think that's a likely downside target for this market. So from an intraday perspective, day trader perspective, even a swing trader, we'll go after that short side now in anticipation of a test of that 94 even. Hard to buck that 25-day pattern. That's a big one. Generally, that's a reflection of day-to-day news in the market. So 25-day pattern, pretty influential. Euro US dollar, bit of a leading indicator for us. We talked about this the last couple of weeks, how the 50-day held higher in here. 50-day pattern held up despite the pattern in the dollar index and the dollar Swiss both being bullish. You would think if those patterns in the dollar Swiss and the dollar index were bullish, that the 50-day pattern in the euro would be bearish, but it wasn't. In fact, it held pretty good support here. Look at that. Look at all these tradable patterns from the 5-day all the way up to the secondary higher. What that tells me is you're probably going to test primary resistance. You have shorter term primary resistance up here around 1850, 118.50, and above that you're looking at your overall primary pattern at 50% retrace at 122. Well, that may be a stretch. On the other hand, we do think that this market's going to test 115, and that opens the door likely to a test of 118, maybe a little bit beyond there, 18.5. So looks like you have pretty good upside in this market. Essentially, day traders on the buy side looking to buy dips in the euro, include us in that crowd. Swing traders also. So swing traders looking to buy dips in the euro. Looks like you'll see some upside in the euro going forward here. Gold market. Gold shifted the 25-day up. Gold, another one. We had a big shift. You shifted both the 25-day and 50-day patterns higher for the yellow metal. We think you're going to see a test of 1180. Secondary pattern, however, still down, and that'd be secondary pattern resistance. You're looking at 1180. Overall, your primary patterns is still down. We're more swing traders. We definitely participate on the day trade side, so that's why we show you these shorter term patterns. Overall, the primary pattern down. You're still in a bear market in gold, similar to euro, but you do have some upside here. So we'll anticipate a test of that 1180 level. That's a big level right there too. Essentially, you're coming back all the way to the breakout here, and then we'll have to evaluate what's going on then. You're seeing some pretty good shifts. We still see these overall as a secondary move and potentially testing those longer term primary patterns in these markets. Next market we'll take a look at will be the 10-year interest rates in the United States. And there that secondary pattern held. There's our secondary level, 1.9 held up, and you actually shifted the 5 and 10 day higher. Interesting that market turned the 5 and 10 higher short term. Generally that would be dollar supportive. So sure, you're seeing some big shifts in the currency markets. On the other hand, again, it's just a continuation of the secondary corrections overall. But it looks like you got a shot for some movement, and we won't be shy about being on the short side of some of those dollar trades. On the other hand, long term, from an investment standpoint, your primary pattern in the dollar index is still up. Primary pattern is still down in the euro and gold. From a trader's perspective, however, we don't have a problem participating in that for sure. Last market to take a look at, the U.S. stock market. We don't often cover this market. It's at a critical level now, though, and I think it's worth watching. With looking at the green box is your 25-day pattern. That's up. Pretty smart recovery. On the other hand, you can't clear the September high. Interesting. That's an exact 2/3 retracement from this high right here. So you take the high just before the collapse. It stalled at 2/3 there, 66. You take your 50-day pattern, your 50-day high, 50-day resistance would be 2026 in the S&P 500. So pretty interesting. The 50-day pattern down in the U.S. stock market, and you're just below resistance there. So that's going to be a level to watch. And you have to remember, interestingly, you have a bearish seasonal in the stock market. So that will definitely be something to watch now for the next couple of weeks in stocks for sure. I'm going to be giving a free webinar later in the week at Top Step Trader. I'll leave a link below this video. You can come and see me there on Thursday. Pretty good organization. A lot of Chicago Exchange guys involved in that. So looking forward to meeting them and speaking to all the people in their trading room. Thank you so much. And if I don't see you there, I'll see you here next week.